All of the major stock market averages in the U.S. finished the day with strong gains on Friday. The Dow Jones Industrials is up better than 330 points. That is a 1% gain. The S&P 500 rose by 1.9%. The Russell 2000, 1.7%. And the NASDAQ was up 2.8% on the day. In fact, the NASDAQ is the only one of those four market indexes to finish the week in the black. The other three indexes lost ground on the week, despite recovering most of those losses on Friday. And in fact, all four of these indexes still have gains on the year. But what's going on so far in 2023 is you're seeing a reverse rotation out of the value-oriented stocks that did well in 2022 into the beaten down growth-oriented stocks that fell apart in 2022. Now, a lot of people are obviously betting that there's going to be a rebound in those names. Now, some of this could be short covering, where people who were short those stocks want to flatten out and take profits. But I think other people are tempted to buy this dip. They're bottom picking. They think if we buy some of these really beaten down names, those are the names that are more likely to recover in 2023. But I think the fundamentals that were driving the rotation out of growth stocks into value stocks in 2022, those fundamentals aren't going to change in 2023. In fact, they're going to get even worse from the perspective of growth-oriented stocks. And so after this correction, I expect these growth names to roll over and make new lows sometime in 2023. In fact, I think early in 2023, these gains are going to be lost, and these stocks are once again going to be sold because the rotation from growth to value didn't end in 2022. That's when it began, and I expect it to continue in 2023. And it's not just the rotation from growth to value, but the rotation from domestic to international. In fact, even though the U.S. stock markets are up on the year, the international markets are enjoying even greater gains, especially when you factor in the weakening dollar, which is accelerating the size of the gains on foreign stocks when measured in depreciating U.S. dollars. And not only are we seeing a rotation from U.S. stocks into foreign stocks, I think we're seeing another rotation from developed markets into emerging markets. And these are new trends that are only just beginning, and I think they have a lot of legs. And I think one of the trends that may have the most legs is the trend developing in gold. Gold once again hit a new 9-month high on the week. We almost got to $1,940 an ounce. I think we settled up around $1,927. That wasn't a big gain on the week, maybe up another $5 or so. But we continue to climb a wall of worry in this bull market in gold. Now, one of the reasons you know we're climbing a wall of worry is looking at the tepid reaction we're seeing to these new highs in the price of gold in gold stocks. In fact, gold mining stocks actually slipped a bit on the week, although they did have decent gains today, even though gold was a bit softer on the day. But gold stocks would have to rise about 30% from here to get back to where they were 9 months ago when the price of gold was the same as the price is right now. And what this is telling me is that a lot of the gold traders are nervous about this gold rally. They expect it to reverse. If they believed in this rally, then they would want to participate by buying these gold stocks, because gold stocks generally are forward-looking. And so if you have a optimistic outlook for the future price of gold, you would be more inclined to buy gold stocks than the metal itself. But because most investors don't have that optimistic outlook, they're not buying these names. And that is one of the reasons that I expect this rally to continue, is that it's on nobody's radar. Nobody is paying attention to it, and those who are don't believe in it. And I think one of the reasons that people aren't paying attention to what's happening in gold is they're being distracted by the sideshow that's going on in Bitcoin. Because gold's 6% or so gain so far in 2023 pales in comparison to the 35% or so gain that we we see in Bitcoin. As I'm recording this podcast, Bitcoin is trading at around 22,500. Now, I didn't even think that Bitcoin was going to get above 20,000, let alone 22,500. And since we've managed to overcome that overhead resistance, certainly it's possible that we can see a bigger rally. Maybe we can get closer to 30,000 on this rally. Now, it may stall out long before it hits 30,000, but I certainly can't rule out that possibility. Because what's going on right now is investors are buying the lowest quality names. And I can't think of an asset of lower quality than Bitcoin. And so that's what's going on. In fact, if you look at the gain year to date in the Grayscale Bitcoin Trust, it's up 47% so far in the year. So despite the fact that the parent company of the Grayscale Bitcoin Trust is about to declare bankruptcy, and all the other problems that we're having in Bitcoin and crypto in general, speculators are still snapping up Bitcoin and shares of the Grayscale Bitcoin Trust. Now, even though Bitcoin is up about 35% so far this year, it's barely made a dent in the 65% decline from last year. In fact, even at 22,500, Bitcoin remains close to 70% below the all-time record high that it set in late 2021. But the big difference in the gold rally and the Bitcoin rally is that the gold rally is sustainable and the Bitcoin rally is not. Gold is rallying in a bull market, Bitcoin is rallying in a bear market. And while gold is going to be hitting new all-time record highs, Bitcoin is going to be hitting new lows. Obviously not record lows, because the record low is barely above zero, but it is going to be taking out the low that it hit in 2022 in 2023, probably around the same time that gold is hitting new all-time record highs. Now, the reason you're getting all this optimism in Bitcoin and a lot of other assets is that investors are factoring in the Fed pivot. Most people expect the Fed to finish the tightening cycle sometime in the first half of the year, and in the back half of the year, they're anticipating that the Fed starts cutting interest rates. And it's this anticipation of the pivot that is driving this move back into speculative assets. But what the market doesn't understand about the pivot is that if we get it, it's not going to be because the Fed has been victorious in its battle against inflation, but because it has surrendered. And the reason it's going to surrender is because it's going to want to fight a different battle against recession and potentially a financial crisis, because we're not going to have a soft landing, we're going to have a hard landing. And a hard landing with higher, not lower inflation is not bullish for growth stocks, it's bearish. And it's not bullish for Bitcoin, it's even more bearish. But what it is bullish for is gold. And what it's very bearish for is the US dollar. So sometime soon, I expect markets to start reflecting this reality instead of the current fantasy. Instead of